All right, welcome to Coffee with Marcus and Mark. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. Today is Thursday, September 29th, second to last trading day in the month. And the S&P 500 rallied 2% yesterday, but stocks are still on pace for monthly losses. Also need to take a look at the 10-year yield because it's on the rise again, and mortgage rates hit 7% yesterday. So what does this mean? Plus, we will show you our current positions and how we are trading these markets. So as you can see, there's a lot to talk about. So let's get started. But if this is your first time here, hi, I'm Markus Heitkoetter. This super smart guy over there today matching me in black is my head coach, Mark Hodge. So we are real traders who trade live accounts, and therefore we had a lot of trading experience. And in this show, we want to show you how we trade these crazy markets. So as you can imagine, we know our stuff and we're not afraid to tell you like it is. So if you're looking for some honest insights into the fascinating world of trading, you are in the right place. Now let's take a look at what happened yesterday. And this is where I brought up the 5-minute chart of the S&P 500. And yesterday, we opened pretty much unchanged. And then, Mark, it was up, up, and away, a 2% rally.
Yeah, it was a great day, Marcus, and really just kind of buying throughout the session, as you just mentioned. So nice finish, nice gains. Looking like traders were enjoying buying these levels near June lows.
Right. And
But
then, of course, the question is, does that mean that we have finally found a bottom, or was this a dead cat bounce?
well, we'll have to see. But today, traders said not so fast. Because there you see the picture for today's session, opening lower, so gapping down, actually going on a pretty decent slide here in the morning session, taking out the lows established two days ago in June lows. So uh, down 2% right now.
Yeah. So yesterday, I mean, we came off of 6 straight days of losses, and this
Yep.
were, I mean, at some point, some buying will occur. So the question right now is, will these June lows hold here or at around these June lows? Because we know that we already moved lower. And is this now the worst? Is the worst? Does this mean that now we're bouncing back? And we already know that September traditionally is just the worst month of the year for stocks. And this September, September 2022, did not disappoint.
Not at all. Not at all. So today and then tomorrow to wrap up the month of September. So there are essentially 2 trading days left. Right now, the S&P down 8% for the month.
Yeah. And we talked about it in the beginning of the week. This week will be just a week with lots of volatility because there hasn't been a lot on the economic calendar. We heard a bunch of Fed members speaking. And I mean, you mentioned it yesterday. It didn't seem that there is the unified front that they wanted us to believe with the last Fed meeting.
It just comments kind of taking different angles, different sides, rather than the what appeared to be a very strong stance, and like you said, a unified front from their actual statement. So yeah, that could be leading to some indecision. Uh, I mean, today you also had a move lower in Apple, right? And Apple being such a huge company, you could say a move in Apple is going to have a big impact on the market. So maybe that also contributing to the downside.
Yeah, and we are looking at Apple in a moment because that is a potentially pretty good wheel trade. But I want to stay on the economic calendar for a moment
Sure.
because we on Tuesday we had consumer confidence that came in stronger than expected, and then this morning we had the weekly unemployment claims that also came in lower as expected. I think it's at a 5 month low.
Yeah, I agree. I think it lowest since April, and so again, the Fed here raising rates or interest rates to try and combat inflation. But one of the things that they actually want to see is a slowing labor market, a weakening labor market, which would mean fewer jobs, lower wages, and potentially higher unemployment. But that's not the case right now.
Yeah, and I mean, these are just weekly jobless claims. The big one will be next week, next
Sure.
Friday, when we have the monthly jobless claims. But we also have a super important report coming out tomorrow. We have been talking about it all week. So tomorrow will be the report, the core PCE price index. This is the Fed's favorite inflation gauge. It is expected to still rise. So tomorrow we'll see if it does, and we see all this strong economic data, then probably the Fed will be forced to keep raising interest rates until they see finally a slowdown. However, if we see a lower increase than expected, or maybe it's even negative, I just said it, then we will see some fireworks in the market exploding to the upside.
Yeah, so I mean that could definitely help a little bit of buying interest here around these June lows and lows that we've seen this year. Well, we'll have to see, but uh, definitely a report to watch tomorrow.
Yeah, and thus far it seems it hasn't really affected the probabilities. So traders are still expecting right now, with a almost 60% probability, the Feds will raise rates by 75 basis points versus 40% for the 50 basis points. But again, this is where we are still, what now, 34 days away. So a lot can happen there. But I mean, with rates marching higher, I mean, you turned me onto this website this morning. Yesterday, 30-year fixed mortgage rates topped 7%.
Isn't that crazy?
That's
I mean,
crazy.
look at that. A year ago, 3%, right? Or three and a quarter.
Yeah, exactly. Not even just above 3%, and now more than doubled within a year. So I mean that must slow down at least the housing market. That should slow down the economy a little bit.
Yeah, yeah, and you know the Fed actually welcomes this, so um,
Yeah,
it, hopefully.
we'll see. So looking at the S&P, we actually right now bouncing off the lows that we made on Wednesday intraday. So this seems to hold, and this, when we're looking at the daily chart, it kind of feels that the down move has stopped. But again, tomorrow can change everything. Tomorrow we could see a rally up to probably 37.50. I mean, I wouldn't be surprised that if we see a 3% rally tomorrow, if we have good numbers, or it could push lower.
I'm with you on that one.
Yeah. So how do we trade this? I mean, this is where this morning with the move lower, there are so many candidates to choose from. It's shopping day. I mean, we're trading the wheel strategy, and we love these down days because on down days, that's where you get more premium for selling puts, which is step number one, the first step in the wheel strategy. And we were looking with our masterminds this morning as quite a few candidates. You took a trade, I took a trade, but the trade that we really were interested in, even though we both didn't trade it, and we'll tell you in a moment, was Apple. And that's super interesting because Apple made a move today.
Yeah, so you see this move lower in Apple. Now, technically, it was due to Bank of America actually downgrading the stock from buy to neutral. Their price target was 186, and they dropped it down to 160, which is still above where it's trading right now. But that seemed to send the stock lower after it's been down a little bit over the last couple of weeks. In this case, there was a few strikes that look pretty decent. Looking back at the support indicator that we have in PowerX Optimizer, some
Yeah.
longer term support there. So I liked it for sure.
So right now, yeah, you could sell the 134 put expiring next week, get more than $1 for it, which would give you 31% annualized. And you see, when you're looking for candidates for the wheel, you always have to ask yourself two questions. Number one, would you like to own the stock? And this is where you need to ask yourself, would you like to own Apple? And for me, that would be heck yes, I wouldn't mind owning Apple in my portfolio at all. Now, the second question is, do you want to own it at that strike price, which is at 134? Now, Apple earlier this year has been trading as high as 183. So 134 sounds really like a discount. What do you think, Mark?
Yeah, I agree. And actually, when there was a little more volatility at the open, I think it got down to 133, 132. So you had a couple of strikes, but 134 even right now to me looks good. I like that this has been ranging, right? Rather than just following the overall market and S&P just in a drop or fall. But you also look a little further back, and there are these support levels that could hold on the way down to 100, even if there is a little more downside. So I think this is a great looking chart, aside from it being a solid company.
Yeah, and if you look again at the S&P, where we are making new lows for the year, Apple has held up pretty decent.
Yeah,
So even if it moves towards these lows, you would be protected. So if right now you sell the 134 put, I mean, you can still have a drop of 6%. So you're getting paid really, really well for buying Apple at a 6% discount. And that's how I see it when I'm trading the wheel strategy. I get paid to buy stocks at a discount, even at a higher discount of from where they are right now. And as we know, pretty much all stocks are being discounted. So let's talk about it. We both passed on Apple. Why? It's such a great trade. Just an amazing trade. Loving it.
yeah. And the reason, and really only one reason, is that we already have a position that's highly correlated to Apple. So we were plugging in Apple into our correlation tool matrix here just to see what it looked like, and Google is highly correlated. So that just gets a little too correlated for me, especially because there were some opportunities that weren't correlated.
Right. So, I mean, super high correlation to Google, super high correlation to NVIDIA. And I mean, even without Apple in my portfolio, I already have the correct correlation between NVIDIA and Google. But this was on purpose because I said, oh my gosh, I love these companies. I would want to own these companies. But if now we add Apple to the mix, and I mean, you have AMD instead of NVIDIA, so it's very, very similar
Yep.
similar. So this is where we see a little bit too much orange for our plan. So according to our plan, as little orange as possible, and this is getting a little bit too bright orange. But if you are not in semiconductors right now, and if you're not in Google or other tech companies, I believe that this is a super solid trade here. I mean, I was really excited, and we were almost ready to pull the trigger when we checked the correlation and say, "Gosh, I've done it. Can't do it."
Absolutely.
Yeah. But we took a few other trades today, and I think we'll tell you more about this tomorrow. So this way you're still tuning in, which I think is important. But now overall, just a great day. Earlier, we had 104 symbols to choose from. And this is where it's important that you learn how to use the filters, right? Because this is where the filters will help you to narrow this down. So that's where you can say, for example, you only want to have dividend stocks. You could raise the market cap back up to 5 billion. You could lower the PE ratio to 30. And you see, by doing so, it is bringing down the number of symbols substantially already. And then instead of saying all strike prices, I like to go for at or below the lowest indicator. And that's where we can pare down a little bit the number of symbols that are on there. But I mean, there were really decent candidates. I mean, besides Apple, we were also looking at American Express this morning with our mastermind members. We were looking at Discover Financial Services. I even looked at GM, General Motors, right? Because I mean, it has moved lower, it hasn't made lows like the overall market, and quite a few others.
Yeah, a lot of solid maybes. And, Marcus, this is a good lesson in being patient, because if you were looking at the scanner yesterday when there was an update, there were five symbols to analyze. And Apple did come up on the list, but we were looking at a strike of around 138, 139. And we always say sell puts on down days, sell calls on up days. So yesterday, if you were trying to force something, just wait a day, and now you get a nice down day and you have 75 symbols to evaluate.
Yeah. I mean, this is what we always say. In order to succeed with trading, two conditions have to be met. Number one, you have to be ready. And probably yesterday you were ready. And number two, the markets need to be ready for your strategy. And I mean, if you had some stocks that you wanted to sell calls against, as I did, right? So yesterday,
Yep.
you know that I own Suncor, and I have 4,000 shares or 2,000. Now I'm a little bit confused what I wrote in there. Anyhow, so this is where I was looking at, okay, should I sell calls expiring this week or expiring next week? I, by the way, settled on selling them for next week. Got 50 cents for it. And that's exactly what you said, Mark. I mean, on up days, you want to sell calls. On down days, you want to sell puts.
Yeah, and this is where having a good strategy and rules and a plan helps, because sometimes it can be uncomfortable to do the opposite of what you think you should do, right?
Yeah.
Because when the markets are falling, that's when it's a great day to sell puts. But if you don't know what you're doing, it can be a little uncomfortable.
If you need a solid plan and a good trading strategy, then take a look at the video here. In this video, we'll describe the wheel strategy, and it's only a quick video, 15-minute video. Take a look at this, then you get a better idea of what exactly we are doing there. So see you over there in the other video, and then we'll see you again tomorrow.
Happy trading, everybody.